Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. And there is a lot happening. There are earnings. There is that Supreme Court verdict on the case of Jayaprakash Associates. And of course, there is that big move that we are seeing develop on ICICI Bank. So, I mean, it's a packed day. 12 points higher on the Nifty, 11,462 is where we're at on the Nifty, and about almost 38,000 on the Sensex, 83 odd points higher. Ekta, morning.
Hi Prashant. Well, more of the same, right? Deja vu day after day. Nifty, Bank Nifty, Sensex, all of them at record highs. But what stands out today is what's happening with the mid-cap index as well, because yesterday was a sluggish day for the mid-cap index. So it's seeing a little bit of a pullback today, up around 0.3%. A positive advanced decline ratio on our hands as well. So let's see whether that sustains or not. But a lot of stocks in focus. So something like ICICI Bank, which is the top gainer on the Nifty, up around 5% odd. Cipla reacting to numbers. Strides Shasun, which is in focus, second day running that the stock is up and about, and Nalco also reacting to what is a good set of numbers, and a couple which are coming out today. So what stands out would be something like an Eicher Motors ahead of its numbers, as well as Jet and Aurobindo would be a couple of stocks to watch out for in terms of the volumes that they generate in terms of trading. So a lot to reckon with. In the next 1 hour, we'll get you updates with all of these stocks. But Sudarshan Sukhani joins in to discuss the technicals of the market then. Sudarshan, morning. Nifty, Sensex call, as well as what your stock-specific strategies would be.
Sure. Good morning again. Well, it's as good as it gets, and I think this is a good time to get out. So my view in the morning was that we have a gap up, and that gap up was not getting sustained in the Nifty at least. So take profits and step aside. That view continues. Take profits. We have been long since a long time, and don't get greedy. You are at the highs of this market. We get out, and then for short-term traders, there is a small dip towards 11,340. I'm sorry, 11,440. Somewhere around that, we would be willing to re-enter. But at this point of time, take risk off the table and exit both indices. I know that sounds disappointing because we are at new highs, but that's the reason why we want to exit. Stocks will keep on offering opportunities. See, for stocks, I have Sun Pharma as a buy idea. Pharma has been a favorite sector for me for some time now, and I think it's going to be an outperforming sector. For today, look at Sun Pharma for a short-term trade. Also look at RBL Bank. Banks have outperformed the Nifty, and that is for so many reasons that Lata explained to us in the morning. That could continue, at least for specific banks. So RBL is a buying opportunity. Two buys, Sun Pharma and RBL. One short sell, Z Entertainment, which is breaking support levels consistently. So that's how the markets are shaping. It could be a volatile and dull day at the end of it.
Any levels in play for ICICI, Sudarshan?
No, I wouldn't go and buy or do anything with ICICI. I think the Bank Nifty is at an extreme level today.
Okay. Any of the pharma stocks you're liking?
Yes, see, Sun Pharma is a stock of choice. So is Star. Star had that big decline on the back of news. And then after that news, it's been consolidating for 6 months now. And it's on the verge of a significant breakout on the upside. Vocard is very attractive. Cipla is attractive. I think except for Lupin, which has troubles of its own, and that's showing in the stock price. All the other big ones, Cipla, Sun Pharma, Vocard, and now Star, are buying opportunities.
Okay. All right, Sudarshan, we'll let you go on that note. Thanks very much for joining in and talking to us. So let's get in some more strategies now. We have Shubham Agarwal of QAPP Securities who's with us to discuss his F&O calls. Shubham, over to you then.
Good morning, Ekta. There are 3 calls. The first one is a buy on RBL Bank. Just some time back, even Sudarshan was recommending that. Even I feel that the consolidation in RBL Bank has been quite encouraging, and after that we do see a movement today, and banking stocks are the ones which are there in flavor. So the recommendation is to buy a 600 call option. The target for the same would be 15 rupees, and the stop loss can be kept at 4.5. The second strategy is again a banking stock, a buy on IDBI. 65 call option is what we need to buy at the current level, which is quoting at 2 rupees. The target for the same would be 5 rupees, and the stop loss has to be maintained at 1. Even in IDBI Bank, there is a continuation pattern breakout that we have seen on the chart. So I feel that the momentum there will be quite high. And the third strategy is a bearish strategy on HPCL. So in Petro, we have seen that post the result, there is some decline that has been there, and on the long-term chart also, there's a mean reversion activity being witnessed there, which means that going forward, we might see a sharp decline coming in. So the strategy recommended is a bear put spread, in which the trade would be to buy a 270 put option, and at the same time, we have to sell a 260 put option. The net spread right now is 2.45, and the target spread would be 5.5, and a stop loss for the spread has to be kept at 1 rupees.
All right, thanks very much. Appreciate you joining in with that perspective and those trades. We will talk about ICICI Bank, and I was referring to that earlier. It was up almost 7%. It's come off a little bit from the highs. We have brokerages which are sounding optimistic on ICICI Bank and its prospects. I mean, we've been highlighting this for a while as to, extremely cheap valuations. A couple of things, I mean, actually a lot of things coming together for corporate-facing private sector banks, and two of them especially, ICICI and Axis. Abhishek Kothari is here with two notes, Morgan Stanley and Credit Suisse, and what they're saying. Abhishek.
Well, Prashant, to begin with, analysts have given a thumbs up to the outlook from the new management that they have got, and the risk reward in terms of valuations are very attractive, as it offers a higher margin of safety, is what the brokerages are saying. Now, Morgan Stanley has an overweight rating on the stock. They have increased the target price to 460 from 425 earlier. They believe that in the next 2 years, this stock can be a doubler due to impaired loans getting normalized and the bank returning back to growth. They believe that the next 2-3 quarters may be volatile, and after that they believe that the risk reward is really favorable and margin of safety is high, because the valuations are just 1.2 in terms of price to book value on FY20 basis. Credit Suisse has an outperformance rating. They believe that the CEO has mentioned that the corporate asset quality cycle, the worst is behind them. Most of the provisioning cycle will be taken care in FY19, and bank is well poised to expand its market share and grow the book. They are willing to continue investing as well in the headcounts, which is another positive trigger. And with credit cost normalizing, Credit Suisse believes that the ROE, that is return on equity, can recover to 13% by FY20. Back to you.
Okay, all right, Abhishek. Thanks very much for that. Well, in fact, it's had a very good August for ICICI Bank. The stock is up around 10% on a month-to-date basis. So is Axis, but nonetheless, for ICICI in particular, the stock is very close to its 52-week high, which it had touched all the way back in Jan of 2018 of around 365 rupees. So let's see whether it inches closer to that level or not. Well, turning out to be a very tough day, it seems, for Bharti Airtel. In fact, it's below its 50 and 100-day moving average as we speak. It's the top loser on the Nifty, down around 4.7% currently for Bharti Airtel. So do watch out for that stock, around 18 odd rupees on an absolute basis, which is completely shaved off on that particular counter. So 367 rupees currently for Bharti. A couple of other stocks which stand out is something like an ONGC, which was quite resilient. So that stock is down around 2% at this point. And we have a couple of the Bank Nifty constituents, HDFC Bank, Yes Bank, Kotak, all of these stocks which are currently in the red at this point in time. But we do have Manisha Gupta joining in to tell us what she's tracking today. Any prizes for guessing if it's crude?
Well, it is, yes, and it has been very, very volatile with what's happening in the global markets, especially when you are on one side looking at US and reimposition of sanctions on Iran. That, of course, would have its impact. But the deadline, remember, is November 4th, so the markets really are watching out for that. On the other side, we have seen the Chinese imports of crude continue to decline. It is also about the US-China trade tariff spat, which is impacting other commodities and, most importantly, crude as well. But to put all of that in perspective and where are the crude prices headed from here, we are now joined by Edward Morse of Citi to tell us exactly on what to expect in sense of crude oil supplies, demand and prices for this year and for 2019 as well. Ed, hi, thank you so much for joining us. First of all, what are you reading between the US and Iran sanctions? What can be the impact? What countries would really stop importing completely? And how do you view India in that light?
We think Europe will go down to almost nothing, with the exception of Turkey, where there's some 200,000 barrels a day. So add 1,200,000 to Turkey, that's 1,200,000 that we think they'll be exporting. And on top of that, we think the capacity to smuggle oil into Iraq, both in the southern and the northern part, is another 300,000 barrels a day. So that gets us to a 1.5 million barrel a day number. And then the question is, what happens to Indian imports? And we know some Indian firms have said they are already dropping their level of imports. And probably we'll see a halving of Indian exports to around 250,000 barrels a day into India. So that would leave the gap at about 1 million barrels a day for the market to try to accommodate. And it's our judgment between Saudi Arabia on the one hand and supply growth in Canada, Brazil, the United States, and Russia. There's more than enough oil to not have the reimposition of oil sanctions really have a noticeable impact on oil prices.
That point is well taken, Ed. So that means that 1 million barrels per day will go off after Iran sanctions do come into place. So with that as a background, what is your sense on the supply numbers and the demand numbers for this year and the next?
Our base case is for oil demand to grow by about 1,800,000 barrels a day. But we think supply next year will be growing by around 2.5 million barrels a day. A large part of that coming from the U.S., a significant chunk, 500,000 barrels a day, coming from a combination of Canada and Brazil, and a 300,000 barrel a day increase next year from Russia on top of the current 300,000 barrel a day increase. Add in natural gas liquids to the mix, and it's a pretty big overhang. It's an overhang of about 600,000 or 700,000 barrels a day for all of 2019 as a whole. That's an accumulation of a good 180 million barrels in inventory, and we think therefore prices should get below $70 for much of next year, but particularly toward the end of next year. And there might even be a perceived need by Saudi Arabia to cut back on the production side in order to rebalance the market and keep the price from going down further.
All right. So those demand numbers actually look good, Ed. So in light of that, what is your sense on the prices now for the rest of 2018? Because for the very near term, we have seen prices actually trade in a range.
Yeah, so through 2018, we think Brent will be in a mid-70s range. I can see a pop to the high 70s, but that is likely to bring more oil into the market. I think the Saudis at the moment are trying their best to keep oil exactly in the range that you've noted, mid-70s, maybe even a little lower than that. They are concerned about their business partners. Those include the United States, India, and China, and they've heard from people on the street, truck drivers in all three countries, but also from the governments in all three countries, that getting Brent above $80 is bad for those customers, and I think they've listened to that.
All right, so $80 perhaps can be a stiff resistance on the higher side. But also talk to us about the US and China trade tariffs, Pat. I mean, the way the both countries are warring with the lists of commodities here, with the latest China retaliation, and also the fact that China does import crude oil from US, as you said. What is your sense on how much of an impact can we see on China and rest of the global markets?
China had become a very large importer of U.S. liquefied natural gas last winter, taking 30% of U.S. exports. At the moment, it's around half of that, but it would be expected to go up again. Now that there is a tariff threat, cargoes are being diverted. The importers, whether it's Unipec or PetroChina, of both LNG and crude oil out of the United States, don't want to pay that tax. They don't want to pay that 25% tariff, but so we're seeing a dislocation. So we've seen in the last month a drop in U.S. exports into China, but the third party, the traders who are holding that, have moved it elsewhere. So some of it has been diverted into other places in the Asian market, including India, where U.S. exports have grown.
Oh, well, absolutely. The US exports to India have actually doubled from last year, as you were talking about those numbers, Ed. But, just coming back to the prices, because that is what the markets really want to know. So just keeping it with the numbers for this year and the next year, how are you playing crude oil prices for these 2 years?
We think the market may be range-bound, but the range is pretty wide. For the next 2 years, we're thinking of it as a $60 to $80 range. Beyond that, it could be a $45, $80 range.
I've talked about a $60 to $80 range yet. Is there any possibility at all that comes to your mind that we might see the crude oil prices breaking above 80 or even going closer to the three-digit $100 per barrel?
A bunch of scenarios in which the price gets to be above 100. The most logical one is coming back to what we should remember. We're living in the era of the crisis of the petrostate. And we could see Venezuela, Libya, Nigeria going offline together at the same time. And that would be, 3 or 4 million barrels a day of lost crude oil. That would give us $100 plus prices. We are not concerned the way the bulls in the market are concerned about a lack of investment getting to the $100 price. We don't perceive the market in and of itself having a very big supply gap, if any supply gap at all.
Comes into there. All right, Ed, we'll let you go at that. Thank you so much for joining us. That precisely is the view coming in from Edward Morse of Citi, saying that the crude oil prices are expected to trade within 60 to 80. There would be an impact of Iran. There would be an impact from the US and China trade war as well. But a wider and volatile range is what you can expect for the next couple of years. 100 is something that he's not ruling out, though. If there are concerns from those 3 major cities or other petrochemical countries, then of course the possibility of a spike up on crude oil prices from here on is also not ruled out.
We have the market, which is right there when we started at 11. There's no big change or anything of that sort. I mean, one space where we got lots of numbers yesterday and then commentary from management post the numbers, which the market is paying attention to today, is the entire pharmaceutical space. Ekta, what are we focusing on primarily?
Well, a lot of numbers to reckon with today, as well as the commentary, like you mentioned. But it seems as though, Cipla is really taking top honors in terms of the reaction within the pharmaceutical space. So overall, it was an operationally inline set of numbers, you'd have to say, for Cipla. And that's exactly what CLSA and Motilal Oswal have said. And that's simply one of the reasons for that, Prashant, is because the margins have improved on a Q-on-Q basis. It's come in at 18% versus 15% in Q4. And the key disappointment in Q4 were the margins, which had come in at 15% versus 19%. So the street wanted to see this sort of improvement. The management has also mentioned that, margin enhancement, sustainability will be one of their key focuses going forward. Separately, the company is guiding for around 15 product launches in the US in FY19, and India should grow around 12 to 14% according to them as well. For Lupin, the commentary has been, they have a couple of deliverables, I would think, in FY19 for Lupin. So, for example, they are expecting the US to ramp up in the second half versus Q1 FY19. They haven't changed their guidance as yet for the overall business. So, they're saying single-digit revenue growth, margins of 18 to 20%. They're cutting back on R&D spend. They're, looking at sales force, etc., and other measures in order to probably enhance EBITDA at this point in time. And they're hoping that the resolution of the warning letter is probably going to try and happen by the end of FY19. Stride Shasun, follow-up buying. Remember that Q4 was an absolute disaster for Stride Shasun. So the recovery that they've seen this quarter in terms of the commentary is what is actually, boding well for the stock as well. They've upped their guidance, for example, for the US market filings to 20 to 23 versus 18 to 20 earlier. So let's see whether they manage to deliver. But as of now, the street seems to be quite sanguine about that. Natco disappointed the street in terms of the elevated expectations that they had. So let's see what they have to guide for post the conference call.
Okay, that's a lot of pharma numbers
in
to
fact,
digest.
Aurobindo is coming out today as well. So that'll be another stock to focus on.
A lot of interest in Aurobindo to